Welcome to the Phil Grande video library. Now, the stock market is at a high. We've been, of course, the market for the last 6 years, back to back. We're going up on an average of 30% a year. We're up about 200%. And it's all fake. It's all fake. It's all done by financial engineering. And what they do, of course, is print money, and they put it into stock specifically to rally stocks. The Fed does, and you have to tell you they're not doing that. They're taking the money to create jobs and to help with the economy, the recovery. It's all not true. It's just not true. When the percentage of full-time jobs to population is at 30-year low, well, then I mean, come on, they're lying to us. And you look at all the different numbers, it's amazing. When you look at the durable good numbers are down, you look at the GDP numbers are down, we have a slew of economic numbers coming in. They're all negative, but yet they keep telling us how wonderful the economy is, how well the middle class is doing, all this sort of stuff. But the biggest problem, the biggest lie is the 5.6% unemployment rate. Why is that? Well, the 5.6%, okay, is bad to say it's 5.6 when we know the unemployment rate is really 12. That's what it is, 12%. Actually 11.9, but we'll call it 12%. Because by creating a fake number, 5.6%, that means that there's a couple things going on. That you, as president, he's intentionally ignoring and he's overlooking the suffering of 100 million unemployed workers. They want work. But when he says, well, I'm at 5.6%, we're creating 250,000 jobs on average every month. Well, he doesn't go to work on the problem because he's saying there's no problem because we're in a great recovery. Everything's back. And like you always hear him say, you know, everything's better now than when I first took office. So the problem is you've got all this suffering going on with 100 million unemployed. They want jobs. They want their commander-in-chief. They want the leader of the free nation, the country, the head of the U.S. He's our leader. Go out and get us jobs. But instead, he's comfortable because he's lazy. He's already admitted he's lazy. So he'd rather cheat. And here's how they do it. All right, first, is who they don't count. So if you've been out of work for, let's say, you've been out of work for 10 years, okay? So you're out of work for 10 years, or you're out of work for 5 years, or you're out of work for a month. It doesn't matter. Here's the key, if in the previous 4 weeks you stop looking for work, then what they do is you're not counted in that 5.6%. Let me say that again. If you've been out of work for a week, a year, 10 years, and you stop looking for work over the past 4 weeks, you are not considered unemployed. Imagine that. If you never find work again, you are never counted as unemployed. You're not in that 5.6%. That's the criteria. Think about it. If you've been out of work and you stop looking for work over the past 4 weeks. 2, another trick they pull. If you perform 1 hour of work, let's say you've been out of work now for 6 months. You're out of work for 6 months, and your neighbor knows that, and he's a nice guy, and he says, "Hey, why don't you come over, and why don't you come over and cut my lawn? Okay, come over. I want to help you out. I want to give you a few bucks, okay?" And so he thinks he's a pretty good guy. He's helping you. You're happy. You're getting. Of course, you're getting your little money you made. I don't know. If you're out of work and you, I don't know. Let's say you work 1 hour a week cutting his lawn for him, and you're paid $15. You're paid $15, and you worked 1 hour. Okay, 1 hour. You are not part of the 5.6%. Nope, you're not counted as unemployed. Now think about it. You've been out of work for 6 months. You go over to your neighbor, and you work for 1 hour cutting his lawn. You are not considered unemployed for that 1 hour. Number 3. I mean, it's ridiculous, isn't it? Number 3. Now, if you are unemployed and you have a degree at, say, at MIT, these are called underemployed, MIT. and you work at McDonald's, okay, and you can't find a job, and that's called underemployed. You're not considered part of the 5.6%. That's right. Here's the worst. This is number 4. Number 4, I think, is the worst. Obama has changed it so if you're one of the 12 million disabled workers getting $1,200 a month, what you get, staying home watching Oprah Winfrey, you are not considered part of the 5.6%. Nope. Now, you would think that 12 million disabled people who are getting $1,200, they'd be considered unemployed, be considered part of the 5.6%. Nope, they don't count them. Isn't that amazing? They're not counted. And so that's how they cheat. So one, if you've been out of work a year or 10 years and you've stopped looking for work over the past 4 weeks, you are not considered unemployed. Your neighbor says, hey, cut my lawn, and you cut it every week, takes you an hour, gives you $15, you're not considered unemployed. If you're underemployed, you're an engineer, MIT, and you're working at McDonald's and you're underemployed, you're not considered unemployed. But the one that really gets me, if you're one of the 12 million disabled, and you're not counted in the 5.6%. That's right. So you stay home, you get $1,200 a month, you're not part of that 5.6%. Now, what does this do? Oh, this causes a lot of problems. This equals a lot of problems. Why? Because they set up off of an unemployment number their economic policies. Okay? Their economic policies, ECP. So they're using wrong information to set up their economic policy. So they're saying, well, our unemployment has dropped. When Obama got in office, the unemployment was 10% when he got him into office in 2009, right? So that was 10% 2009. Now they're saying, look at this, it's 5.6%. What a great job I did in 2014. Now, the problem with this is they're not going to put the right programs in place. So the real problem comes, that means that the president is intentionally ignoring and overlooking the suffering of the 100 million. We have 100 million unemployed. So he has no empathy. He is intentionally overlooking their suffering. Can you imagine? He could care less about them. Because as far as he's concerned, the unemployment is 5.6%. He's done his job. He's going golfing. So they're not going to put any of the economic policies they're putting in place, not going to pick up on this 5.6%. This is really bad. This is very dangerous. This is very dangerous. So that's how it works. It will continue to work that way. And just like they lied about their GDP number, they lie about that. What's the GDP? That's all your consumption. They lied about GDP. And see, we get all these bad numbers. And again, GDP, they said, was 3%. It was going to come in at 3%. But instead it came in at 2.6%. But it's not really 2.6%. It's really 1.1%. Because what did they do? They fudged the inflation number, and they fudged the inventory to drop to it should be at 1.1%, but they fudged the inventory, okay, and the inflation number to push it from 1.1, okay, to 2.6, see? So this is very bad for the economy because now they're saying, wow, look at this, the consumption is 2.6. So going back to the economic numbers, they are not going to, going back to the economic policies, they're not going to give us the policies to deal with 1.1%. The policy is going to be dealing with 2.6%. That's interest on your home, interest on your car. It has a huge waterfall effect. I mean, it just has a huge effect. Because now if they're saying the unemployment is so low, 5.6%, gee, we can move interest rates up. That's what they're saying. And that's why the dollar is going up. Because they're saying, because the unemployment rate is 5.6%, because the GDP is 2.6%, So now they're saying we're going to raise rates. We're going to raise rates, and we're going to raise them in June. And that's why the dollar right here, this dollar, is going through the roof, and why it's been going straight up. Because people have been dropping their euros in Europe, and they're buying the dollar based on they feel in the United States the economy is really doing terrific. So I'm going to buy the dollar, seeing how the economy is really doing terrific. I'm going to get rid of my euros because Europe, our GDP is almost 0.5%. At least the U.S. GDP is 3% or 2.6%. No, it's not. It's 1.1%. Well, look at their unemployment. Unemployment's only 5.6. No, it's 12%. So people are getting duped into thinking we have this great economy. And when the dollar goes up, what has happened? Gold has been going down, right? And we talked about this last week. So your gold right here has been going down, all right? So dollar up, gold down. That shouldn't be happening. So all the people that are holding on gold, the dollar's going up because it's getting the wrong information. You see what I'm saying? It's getting the wrong information. So there's a whole waterfall, a host of problems when you do this kind of thing. And that's why we have a disconnect between the stock market and the economy. And that's why the stock market, always remember, it's no longer the stock market, it's individual stocks. That's what you should be thinking about. And that's why we use charting. And that's why you should not buy a stock without charting. Just follow the money flow. Stop following the fundamentals. No more. And this is what I'm talking about. Now, today, what we do is we use the PT2 chart, call it our PT2 talking chart because it talks to you. When it's green, it tells you to buy. When it's red, it tells you to sell. It's real simple. This is so easy to use. So you don't care about market caps, trailing PE, forward PE of GE. You don't care about price to sales, price to book, profit margins, operating margins. It's all bull. It's all crap. Because when they're telling you that we have a GDP, now remember, 70% of our economy is consumption, right? 70% is consumption. Now think about that. And so they're telling us that everything is really doing well because we have only a 5.6% unemployment rate. And we have a GDP, okay, of 2.6%, which is all bold-faced lies. So now they're telling us consumption is better than it is, and it's not. So again, so you got your dollar, as I said, is shooting up, pushing your gold down, and then it was pushing your oil down at the same time, and it shouldn't have done that. So that's where we stand, and that's why no longer do the big companies like Vanguard, T. Rowe Price, Bank of New York Mellon, J.P. Morgan, they no longer work on fundamentals. They only care about is money going into these stocks. They buy them. Money's coming out, and we follow them, especially with our PT2. So, and same thing when we did our gold. Let me show you what our gold. GDX, because the dollar was so strong, look at that. If I go back to a year, look how the dollar dropped because the dollar shouldn't have been going up. This should have not happened because they're saying this is going up because we have a 5.6 point unemployment rate, 5.6, we got GDP at 2.6%, and so everybody's, well, gee, let's go and buy the dollar. And as a result, our GDX dropped. So what we did, because it turned red, we knew to short it, make money shorting it. When it turns green, we know it's time to go in and buy it. So because of all the lies and the misinformation, we're relying on just simply following the big institutions. Who knows this is a lie? That's why you want to follow T. Rowe Price and Bank of New York, because they know this is all a lie. So when they put their money in, we'll put our money in. When they take their money out, we take ours out. They put their money in, we put our money in. So that's how so that's it. And so now you know the fact about the 5.6%. It's all a lie and how it affects the economy and affects you. But if you're good with charting, it doesn't affect you. See you in the charts.